We know here in the central Maine market over the last year, housing inventories have gone from roughly about half a month of supply to just over 1 month of supply, so still very squeezed. But on the national scale, in the last 6 months, there's been a bigger change, and that is it's gone from 2 months of supply to just over 4 months of supply. Could this be a key indicator about where we're headed in the future? Stick around, we're going to get into that today. Hello Central Maine, it is your realtor Nick Isgro with eXp Realty, and today we are going to dive right into some fresh statistics that have just come out on housing supply. We're going to look at the national numbers, which have some really potentially large implications, as well as kind of scale back to look at what's going on here in the central Maine market, combining the two as always to try to make some sense of what's going on and maybe make a prediction about where we're going in the future. Now, before we get into any of that, I want to welcome you here to the channel. If you've never been here before, we cover all things real estate here in the state of Maine, but particularly in the central Maine market. If that's of interest to you and adds value to your process in the buying and selling of homes, do me a favor, go ahead and like this video, hit subscribe, knock that little alarm bell. You'll be notified every time we put out new content. So we all know that the US housing market in general has been changing over the last several months. The drastic rise of mortgage rates, which has really gone into effect specifically to try to slow down the rapid growth, the kind of foreseen and unprecedented growth of home prices that we saw over the last couple of years. It's actually worked. We've seen home prices start to slow down in the appreciation. We've seen sales start to ratchet back a little bit too. Now, nationally speaking, it's a little bit different than locally. Here in our local market, we just saw last week when we did the month-to-month report, we saw sales were fairly normal compared to the year before. We had new homes coming to market, a little less than the year before, but still normalized. But it was really those new pending contracts that had slipped, which are going to lead us into slower sales in the month to come. That would be the natural prediction. But what's happened nationally? What's causing the big row here? Well, the big statistical anomaly that experts are looking at is that home inventories on a national level have doubled in the last 6 months. Now, what do we mean when we say home inventory? We mean months of supply. So that is, if we were to take all of the homes that are on the market right now, put nothing new on the market and just sell them off at the pace that we are currently selling at, how long would it take? Nationally, over the last 6 months, we've gone from just over 2 months to 4.1 months. Now, there are very few times, historically speaking, that in a 6-month period, that supply has doubled in its months of supply. Now, some of this is just a mathematical expectation, right? If you raise interest rates, you slow sales down, inventories are bound to rise. So this was in some ways a predicted outcome of raising the interest rates and slowing down some of those sales, which in turn ratcheted back a lot of that kind of unprecedented and really unsustainable appreciation, with homes over the last couple of years having double-digit appreciation. That just can't go on forever, and it is coming to a halt with this. But what else does this mean? Well, the key thing that experts are looking at is whether the absolute inventory, that's this number of total houses on the market, the months of supply, which by all means is still historically undersupplied and still very low on the supply when we look at supply and demand, whether that overall supply number is going to be more important than that rapid change in its rate. Now, why is it a big deal? Like, so what? So it changed, it doubled over the course of 6 months. Why would that be a big deal? Well, here's the key. This kind of volatility, where we see a doubling of supply over the course of 6 months, historically has meant a reduction in home pricing or a depreciation over time in the market values of the home. In fact, looking back, in 34 instances where months of supply has only gone up 1 month over a 6-month period, 88% of the time, home prices have actually had negative appreciation over the following 12 months. And if we look at this case where we've increased supply more than 2 months in a 6-month period, there's only 9 cases of that happening historically, and every time home prices were lower 12 months later. Okay, so we should be expecting home prices to fall, right? Well, not necessarily. In fact, the experts at Morgan Stanley are not counting on this at all, and a lot of the experts looking at the market right now are continuing to look at this, and here's why. Because even though we have this statistical anomaly of the months of inventory doubling, and as I said, I want to remember here in central Maine, it's really still barely over 1 month of supply. We don't have anywhere near 4 months of supply here in Kennebec County. But looking at it at the national level, the overall homes that are on the market, the levels of inventory needed are just simply not there to count for depreciation. And in fact, there's no indicator that the months of supply is going to continue to go up the way it has. And that's why what we're looking at is this question of, is this statistical anomaly a sign that home prices are going to depreciate over the next 12 months? Or is the overall number of homes on the market, this overall raw inventory number, going to turn out to be historically more important in the end? Well, what most of the experts are saying and the team at Morgan Stanley are saying is that's going to actually be the case. In fact, Morgan Stanley specifically is estimating that this year, 2022, home prices will go up about 9%, going into next year, roughly about 3%. And that's actually close to a lot of what we've seen before as we've looked on this channel. If you look at Fannie Mae, Freddie Mac, all of these folks are indicating that they're expecting an average of a 2.5% increase in price going into the future. That's a big difference going into the future as it's been over the last couple of years, which, as we've already stated, was simply unsustainable, having 9, 10, 11, 12% appreciation in the housing market. It looks like it is going to maintain some kind of appreciation, but most likely you're looking at low single digits. Now here's the catch. All of the predictions that are out there right now are indicating that they are predicting a slowing of the inventory that's actually coming onto the market that maintains some of this historical low level. If that is not the case, one of the worst bear market case scenarios they are looking at is actually a depreciation of 3% over the coming year. Again, as always, only time will tell. I think what's going to be more interesting is looking here in the central Maine market, because as we've already stated, here in central Maine, we don't have 4 months of inventory. We have 1 month of inventory on the market. And in fact, we're seeing more buyers come to market. Now, over this last month, we did see a slowdown of actual pending contracts, which means that buyers are out there. Sales were up over the last month. That was contracts from the month before. But new contracts as we headed into October are going to be low. It's going to be a little bit more difficult to tell as we head into November and December, because statistically those are the 2 months where you're going to get the lowest amount of premium on the home. That's a video that we're going to do next week, as those statistics just came out as well. Here in Maine, November, December, by the way, if you're a buyer, those are your best months that you're going to get a deal as we head into the slower holiday season. But that will be again for another video. But it will continue to be very, very interesting to watch these inventories. And as always, we're going to bring it to you here on this channel. The purpose of this channel, the purpose of all of these videos, is to make sure that you, the consumer out there, that you are the best and most prepared buyer or seller, whatever the case may be, as you're heading into the market to make these critical decisions. These are big decisions you're making when you're talking about real estate. That said, if you are in the market right now, or if you're thinking about getting in the market, you just want to pick someone's brain that's in the market to go over some of the scenarios that you might be playing out in your actual life right now, do me a favor, go ahead, reach out to me. All of my contact information is linked in the post below. If you are also in that scenario, go ahead and drop a comment below. We'd love to hear from you. We'd love to hear what some of your predictions are on this. I know there's a wide variety of opinions as we continue to ride this out, but as we do, we're going to keep it fresh right here for you. Thanks so much, as always, guys, for sticking around to the end of this video. Until the next one, see you next time.